Welcome back, and it has been quite a difficult day for many of these commodities. I actually want to bring the metal prices on the screen first of all, because we've seen Asia open on a very strong note, and it continued like that until the European markets also opened. But now we're looking at many of these base metal prices continue to decline a bit. So after that multi-year highs that most of the metal prices have hit in last couple of sessions, right now we are looking at some profit taking coming in for copper, nickel, zinc. All of these metals have seen a bit of a profit taking after that very sharp run in the recent few sessions. But take a look at the edible oil sector as well. This one continues to run up, even as this is going to be a perhaps second straight year when we are looking at the consumption numbers going slightly on the weaker side. When you look at 2018 and 19, the consumption in the Indian markets for edible oil was at 23 million tons. 2019-20 shows it at 21 million tons. What are we exactly looking at in sense of consumption numbers, production, and the prices, which have actually seen multi-year highs yet again for this sector? What is the road going forward? For that, let's get in Atul Chaturvedi. He's president at SEA, and he joins us on a phone line now. Mr. Chaturvedi, thank you so much for joining us. First of all, on the price itself, because we've seen the last 4 or 5 months constantly seeing a surge in prices in the global markets and the Indian markets as well. That has impacted the underlying inflation numbers also. Where do you see the edible oil prices now holding?
No, as far as edible oil is concerned, edible oil is following the other commodities. If you remember 2008, post-2008 financial meltdown, massive stimuluses were provided by countries, and that fueled the commodities and the stock markets. Similar situation we are seeing as of now. With the pandemic, the response of all governments across the world has been to pump in money and put stimulus in the system. So with so much of money chasing commodities, to expect the markets to be soft is a little bit of a, I think it's not worth considering. So, but having said that, what we are now seeing is the crop in Argentina and Brazil, the soya crop, which was actually looking like to be in trouble, seems to have rebounded, and Argentina and Brazil is now talking in terms of 134-35 million tons of soya crop, and Argentina another about 49 million tons of crop.
Okay.
And our mustard crop is also looking up, and probably we'll have one of the biggest mustard crops ever in our country.
Oh, yes.
So all these things should moderate the prices going forward, and that is actually getting reflected in the forward quotations as well.
Sure.
In fact, if you look at palm 6 to 8 months from now is selling at a discount of about $200 on FOB. So all these things, I think some moderation will happen, but when it's going to happen is $1 million question, but I don't see too much of action on the downside happening up to March.
Point taken. You know, I'll come back to prices. I'll come back to prices in a bit, but there's a very interesting trend that we've seen in the Indian edible oil consumption. Now, there are reports suggesting that per capita consumption of edible oil per person should be 11 kgs. 2017 shows that per capita consumption in India has been 19.3 kgs. I read your quote somewhere, Mr. Chaturvedi, where you've said it is around 16.5 to 17.5 per kg per capita right now. You also have asked the ministry to change the weightage for edible oil in the WPI, that is the inflation number. How much of a consumption pattern change are we really looking at here?
No, there's a massive consumption pattern change. In fact, in 20-30 years back, vanaspati was one of the main ingredients in our edible oil basket.
Sure.
But vanaspati is no longer that relevant. Soya oil consumption has gone up for more than about 4.5 million tons is what we are consuming. Palm, we are consuming almost something like 7.5 to 8 million tons. Sunflower now, which was not present about 15 years back, is now almost something like 2.5 million tons. So there's a definite need for re-looking at the weightage, and that is the reason why we've asked the government to seriously look at it and give it each commodity its due weightage.
Point taken.
The other point which you said on the per capita consumption, Yeah, per capita consumption we feel is probably in the range of about 16.5 to 17% as of today. 2 years back, India was consuming something like 23 million tons, and our annual consumption growth was about anything between 3 to 4%. Come pandemic, and last year you've seen our imports plummeting from about 14.9 million tons down to about 13.2. And this year we are talking in terms of something like about 12.5 or 12.75 million tons.
That's a considerable decline.
Overall, yeah, whether we like it or not, the fact remains India is a price-sensitive market. Higher prices end up reducing consumption. And now with all this out-of-home consumption and all these destructions happening, we are seeing the consumption growth is actually negative, and negative to the extent of about 2 to 2.5%.
And even then, the prices are hitting highs every single day. I also have with me Mr. T. Gnansekar of Comtrends Research. Gnansekar, hi. You heard that conversation about the edible oil prices. There's a whole host of things to talk about there. But Gnansekar, how do you look at the edible oil prices? Do you see further gains from here?
Absolutely, Manisha, because the fundamentals, though, is pointing to the other side, or, because of the high prices, there's a possibility that, demand could be dented. The sentiment isn't that way. I think the overall market sentiment is still very positive. I think the South American situation is still not settled, and, the upcoming U.S. crop. So the S&Ds are in favor of this rally, unlike in the past where we have seen that when prices rise, the demand supply dynamics could be affected. This time around, I think it doesn't look like that, because technically I think the market is well poised to go higher. One of the main reasons for that is, I think this year, the indices, there is this commodity indices which most of these speculative funds tend to look at very closely. Soybean oil has been given a huge weightage compared to the previous year, which means that they would all be, most of the funds would be, wanting to trade that market very actively.
We've seen that happen into agriculture, well, yes. It's not just the non-agro space, but the agro space also seems to be looking at a lot of speculative money. But Gnansekar, I also want to talk to you about the crude oil prices, because even as the metal prices after that initial run-up have seen some profit taking, crude oil is not taking a breather.
Absolutely. I think crude, there are so many factors which are, presently trying to push prices higher. Though I think Saudi Arabia and Russia and OPEC Plus is going to head into a meeting soon. I think the House is more or less divided whether to increase or decrease the output. So that gives speculators sort of, more room to push prices higher from here. And the inflationary fears is something which, could come into play going forward, but not at this point in time. So right now, I think the funds are piling on to bullish positions in crude.
So edible oil prices or crude oil and everything of use on an everyday basis for average humans is on a rise here. And as both experts are telling us that it can rise from here on as well because of the stronger fundamentals and even cheaper money globally, which is keeping these prices higher. Thank you so much, Mr. Chaturvedi, Gnansekar, for joining us and talking about those commodities. With that, out of time on the show, but stay tuned to CNBC TV 18.